Welcome to the CondoVultures.com podcast with your host, Peter Zalewski, a Miami real estate broker, Wall Street consultant, and expert witness. This podcast is focused on identifying real estate buying opportunities in the South Florida condo market of Miami-Dade, Broward, and Palm Beach counties. The CondoVultures.com podcast is not authorized by the South Florida real estate industry and will most likely annoy many of the region's talking heads. This podcast will feature straight talk and salty language that could be offensive to some. Please remember that past investment success does not determine future gains, especially in South Florida's volatile condo market. For more information, please visit CondoVultures.com.
Welcome to Miami Real Estate Investing Podcast. I'm your host, Peter Zalewski from Condo Vultures. Condo Vultures is a consultancy as well as a real estate brokerage. So if you are in the market for a condominium or you need some advisory work, feel free to give us a call. Maybe somebody from my organization can help you out. If you're tuning into this podcast, you are here for the condo market analysis. It is a overview of what's going on in a particular submarket located within the Tri-County South Florida region of Miami-Dade, Broward, and Palm Beach County. For this particular week, we're going to be focusing on greater downtown Miami. That will be the area that effectively, it's about a 60 block long stretch. It's going to go from Julia Tuttle Causeway to the north down to the Rickenbacker Causeway to the south. It'll be the Biscayne Bay to the east, and it'll be Interstate 95 to the west. For this podcast, we are going to focus a segment on condos. We will focus another segment on luxury condos. Then we'll get into the distressed market, and then finally we'll get into the rental market. We're going to give you some ideas of what's going on in the marketplace in terms of active listings, what's pending, and more importantly, what closed in the period of time that we're going to compare for closings. It's going to be 2022. That'll be January through December of 2022. Keep in mind, all the statistics we are going to use are going to come from the multiple listing service. It is a database that realtors use. What is a realtor? Realtor is somebody with a real estate license who goes, joins a club, pays about $1,000 a year. And for that $1,000 a year, they get a variety of different benefits, but the primary driver is the fact that they get to use this database, which is called the MLS. What is the MLS? The MLS is a database that is used by realtors. Again, people with real estate licenses who join this club. And here's where, if you are representing a seller or you're representing a landlord to go ahead and try to either sell your property and or get a tenant in your property, this is where you make it available. Now, who uses on the other side? It could be the brokerage who are either representing the buyer and or looking for space. Keep in mind, the multiple listing service is simply a database for people in the industry, which is this club. Doesn't mean it's all of the properties that are transacting. What are some of the properties that are not going to be included in here? For sale by owner, for instance, somebody trying to sell their house on their own. If they're not paying a commission really is a driving force behind the multiple listing service. So if you're selling a place on your own, you're not going to be put in the MLS. What else isn't in the MLS? It's going to be places where, think about the signs you see on the side of the road, we buy ugly houses. Those properties will not be in the multiple listing service, as well as rentals for large communities, whether it's 100 units, 200 units, 300 units, those types of buildings where there is a for rent sign hanging on it. That is probably not going to be in the multiple listing service simply because the landlord, the owner, is not going to want to pay commissions on all of the different units that are rented out each and every year. We're going to look at condos, we'll look at luxury condos, we'll look at distressed condos, we will look at rentals. If you have any questions for us or you have any comments, please feel free to send an email to inquiry@condovultures.com. That's INQUIRY at condovultures.com. And then also too, if you're listening to this podcast on the traditional platforms such as Apple, such as Google, such as Anchor, you should know you can actually watch this podcast. You can watch it on any platform that permits for video, such as Spotify. If you want to check us out on YouTube, our handle is Condo Vultures TV. That's Condo Vultures TV. So we'll go ahead. We'll take a commercial break. On the other side of the break, we're going to get into the condo market.
It's a simple formula, and it works. Buy low, sell high. We're Condo Vultures, and when it comes to your real estate, we help you buy low. At Condo Vultures, we represent the buyer, and now's the time to buy. Log on to CondoVultures.com for more information. CondoVultures.com. And remember, before you sell high, you have to buy low. Featured in the New York Times, Wall Street Journal, 60 Minutes, and Time Magazine. Condo Vultures Realty, a licensed Florida real estate brokerage capitalizing on the condo correction since 2006.
Welcome back to the Miami Real Estate Investing Podcast. I'm your host, Peter Zalewski of Condo Vultures. For this segment, we are going to focus on all condos. It's going to be new condos, it's going to be old condos, it's going to be pre-construction condos, anything and everything that's been listed in the multiple listing service, and it's a condo and it's located in greater downtown Miami. We're going to be talking about it for this segment. So let's go ahead. We'll get into the numbers. First of all, there's about 1,500 condos that are actively on the market today in greater downtown Miami, 1,500. The average asking price for one of these condos, $1.3 million a door, $1.3 million a door. The average price per square foot is going to be $832 a foot, $832 a foot. Now, this is a good time for me to pause. If you're new to our podcast, you're going to hear me go on about why price per square foot is more important than price per door. If you've heard this before, maybe it's just going to reinforce the fact of what I'm trying to get you to think about. Now, when you talk about a condo, we're effectively talking about a commodity. And what is the commodity? Commodity is the actual unit. And why is it a commodity? Because they're all, for the most part, the same in and around a building as well as in a general area. And what do I mean by that? Well, when you get into a building, whether it is a 01 line, a 02 line, a 03 line, a 04 line, a 05 line, yada, 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 all of the units will have the same layout in that particular line. So for instance, 901 will have the same layout in terms of the bedroom and the kitchen and the square footage as a unit in 2901, as the same as 3901, so on and so forth. So therefore, when you're talking about condos, typically the only thing that's going to vary in a condominium unit in a particular building for a particular line is going to be what is the angle of the view. Are you high enough to get to have a view over a neighboring building? Are you low enough where maybe the view is going to deteriorate? For the most part, it's all going to be the same. The only time it really sort of varies is when you get out into the top of the building where you're going to get into some of the penthouses, the lower penthouses. Those might have taller ceilings, but generally speaking, all the units in a particular line are going to be the same. The only reason you really actually need to go and look at a particular unit is to make sure it actually exists, because it's Miami, because there's a lot of fraud. Other than that, you can pretty much go off of plans. You can pretty much go off of public records related to that particular building. Now, compare that to what you see with a single family house. Single family house is going to vary greatly simply because where is the property located within a subdivision? What is the shape of the particular lot? What kind of trees are there? How many floors does the building have? What kind of materials were used to build it? Does it have a swimming pool? Is there access to a major road, to a school? Is it maybe in the worst lot on the particular block? Is it the best lot? All of these things were factored in when buyers coming in to ultimately take out a single family house versus a condominium where all the units are virtually the same. The only thing that will differ is simply the floor. Now, when we advise developers who are looking to go ahead and build condos, we generally tell them the only difference you're going to have in pricing is going to be how much you're going to charge a premium as you go higher. Typically, it's $5,000 to $15,000 as you go higher in terms of asking price, and the same amount as you go lower in a particular building. So condo is commodity, house is a work of art. I would compare a condo as if you were pulling up to an intersection, you're in a car, you need some gas. You got 4 gas stations at that intersection. Unless you have some particular affiliation with a gasoline company, chances are you're going to go for the cheapest price per gallon. That's the same way you ought to be looking at condos. What is the price per square foot? Now, some people will say, yeah, but I'm going to get more for my condo because I over improved it. I put in the best materials. Based on my experience, that never really sort of pans out. Those people who tend to over improve their units with all kind of upgrades, they tend to be lucky if they get back what they put into it. Now, we could give them advantages in particular market. Somebody might choose a unit that would over improve it versus a unit that is not over improved. But other than that, you don't tend to get a real big bump, if you will, for over improvements of condominium. So condos are commodities. Single family houses are works of art. So price per square foot in greater downtown Miami, $832 a foot. $832 a foot is what's being asked. And the number of days on the market that these listings have been there, 146 days on average, 146 days. And if you want to do some rough math, you divide it by 30 days in a month, you're coming up with 4.9 months that is taking for those condos that are currently listed for sale in a particular marketplace. Now, let's shift over to pending sales. These are the units that were listed for sale, and now they are under contract or waiting to close. There are 240 pending sales in greater downtown Miami, 240. The average asking price for those units when they went pending, $897,200 a door, $897,200 a door. The average price per square foot when they went pending, $692 a foot, $692 a foot. Days on market, 103 days that they were listed and they are pending. And if you convert that into 30 days a month, you're coming up with 3.4 months that these properties have been listed as well as under contract. Now, let's talk about sales in 2022. This is going to give us our sales velocity base. This will tell us basically how many units are trading and what the pricing should be based on 2022. And we are here now in March. we're at the end of the winter buying season, which typically goes from November up through the end of April. This is the time when the weather is great in South Florida. So in terms of the sales, 3,950 condos traded in 2022, 3,950 rounded. The average price for door, $776,800 a door, 776,800 for a door. Price per square foot, 618 a foot, 618 a foot. And days on market, 78 days. So those condos in 2022 that were put up for sale in Greater Downtown Miami, they were listed, they went under contract, and they transacted in 78 days, which if you want to put that in terms of months, that's going to represent about 2.6 months of, 2.6 months of, is how long it took. Now, keep in mind, when you're talking about one of these condos and you're talking about a place that's for sale or a place that's pending, it's normally between 30 and 60 days from a point a unit goes under contract to the time it closes. So if we're talking about 78 days is what it took in 2022 for a condo to trade, and we compare that to the units that are currently on the market, which is 146, plus another 30 to 60 days to close. If these units were to go under contract today, you're talking about a period of time that's getting close to double. So what I'm saying here is that the places for sale today in Greater Downtown Miami are on the market. And if they do close, it's going to take them twice as long in 2023 as it did in 2022. And that's despite the fact we're in the busy winter buying season when everybody's descending on Florida. I mean, it's not 90 degrees by 9 a.m. and there's not 90% humidity right now. This is the time when everybody wants to come to South Florida, and many of them tend to pull the trigger and they take down deals or they close deals. So to see the days on market going up, it really is a gauge in terms of sentiment. What are the buyers thinking? And more importantly, what are the sellers thinking? Now, what's a good way to gauge what the sellers are thinking is to look at what is going on in terms of the average price that's being asked for a unit versus the average transaction price for a unit in Greater Downtown Miami. So in Greater Downtown Miami, I told you $1.3 million is the average asking price for a condo. However, in 2022, the average transaction price was $776,800. So we got a big difference between what sellers are asking and what units actually traded for, macro perspective in Greater Downtown Miami. That's about a 71% premium that sellers today are asking in Greater Downtown Miami versus what they traded for in 2022. Now, what's the importance of this number? Well, based on my experience, based on our experience, based on everything I've seen and we've seen, and I've been in this marketplace involved in real estate since 1993, so we're talking about 30 years. Generally speaking, when a place is put up for market, put up on the market for sale, when there's about a 20% premium or VIG that is put on top of the average transaction price, that will send a signal to the marketplace saying, okay, this seller might be willing to negotiate. Now, when that figure is greater than 20%, it typically sends a signal to the marketplace that this person wants, they think they have gold in their particular unit, and chances are they're not going to negotiate anytime soon. So if you don't want to waste time, you're probably not going to take a run at something with a huge premium unless you're willing to pay that huge premium. Many investors, when they're looking at condominiums, are looking to not only get the place they want or a place that's similar to what they want, but they also need the appropriate price. Now, how do you figure out where do you go in, maybe take a run at a unit if everything is the same and these are commodities? You typically look at that 20% mark. So 20% over the average transaction price is what you want to look at. And then typically a deal will get done when you get squeezed somewhere in that 8 to 12%. So let's call it 10%. Let's call it split the difference on 20. That's when you get a deal done. So 20% signal premium put on top of the average transaction price will send a signal to the marketplace. This seller might be willing to trade or do a transaction. And then through negotiations, let's say they split the difference and you end up with a premium of about 10% over the average transaction price per se, in order to get the seller to sell and the buyer to sort of swallow it and say, okay, I can sort of do this deal. So when I see 71% premium by sellers today, price per door in Greater Downtown Miami, it says to me that buyers are not willing to pay that price and sellers are asking way too much. But again, price per square foot is much more important for a condominium than price per door. So let's get into that. On the price per square foot basis, they're asking $832 a foot, the sellers, $832 a foot. But the units that traded, they traded for $618 a foot, $618 a foot. That's coming in about 35% premium, 35% premium. Again, way too high, way too much of a premium. Should be in about 20% if you really want to sort of get some activity going. And that, I think, is probably contributing why the days on the market is so high in Greater Downtown Miami now as we go forward. So let's look at sales pace. What was the sales pace in Greater Downtown Miami 2022 in terms of average condos trading per month? Because ultimately we want to figure out if this is a buyer's or a seller's market. So in 2022, there was an average of 329 condos that traded per month, 329 that traded per month. How do I come up with that? I look at the total number of transactions, which is about 3,950. I'm dividing it by 12 months in a year, and I will come up with an average of 329 a month. Now, if I take that 329 a month, which is the sales base, the velocity, I divide it what's currently on the market, which is 1,500. I'm going to come up with 4.6 months of supply, 4.6 months of supply. Equilibrium, as a rule of thumb, is 6 months. Anything greater than 6 months would suggest it is a buyer's market. Anything less suggests it is a seller's market. So greater downtown Miami is a seller's market today based on 4.6 months of supply, with 6 months being equilibrium. However, if we look at the sentiment gauge, which is days on market, we're going to see that 146 days is how long the typical condos on the market today were now going under contract versus 78 days is how long it took to trade a unit in 2022. So right now, it is a seller's market for condos in greater downtown Miami, but the indicator of days on market suggests that as we get deep into the summer, as the heat and the humidity intensifies, we're probably going to see that amount of supply go up. And as it goes up, some sellers will have to decide if they really do want to sell their property, they're probably going to have to negotiate their price. And that negotiation price probably means it's going down, down, down. So we're going to go ahead. We'll take a commercial break. Other side of the break, we're going to talk about luxury condos in greater downtown Miami.
This is Peter Zalewski of the Condo Vultures podcast. I hope you're enjoying the podcast. And I wanted to alert you that if you have a property that you're looking to sell in the Tri-County, South Florida area, I would encourage you to reach out to Jenny Cortez, a licensed real estate broker with CVRrealty.com. She's my partner. She's been in the business for north of 15 years. More importantly, she knows the market. She knows how to get a deal done. And she also realizes that it's more important to get a price that you can accept and sell the property rather than to hold firm on some price that's never going to be achieved and ultimately languish on the market. So if you're looking to do a deal that you want a skilled expert who can help you sell a property, reach out to Jenny Cortez at 305-865-5859, 305-865-5859, or visit her website, CVRrealty.com.
Welcome back to the Miami Real Estate Investing Podcast. I'm your host, Peter Zalewski from Condo Vultures. Let me remind you, if you are listening to this podcast on the traditional platforms such as Apple, Google, Anchor, feel free to go to a video platform, and there you will be able to actually watch this podcast. You can also see the charts. And if you do want to take a look at the charts, the numbers I'm referring to, I'm going to go ahead and include links to all of the numbers in the description of this particular podcast, or you can simply watch it. And when you watch it, you will see the charts. We go ahead and we highlight it along the way. And also to keep in mind, if you want to watch us on YouTube, the handle is Condo Vultures TV, Condo Vultures TV. So this segment, we're talking luxury condos. If you've ever spent any time in South Florida, you're going to hear the term luxury thrown around quite a bit. Everything is luxurious. I like to say, when you're talking about art, it's luxurious art. Therefore, there's a premium involved. When you go to a club, it's a luxurious brand of booze, and therefore there's a premium involved. When you talk about condos, everything is luxury and there's a premium involved. Luxury really should mean to you that somebody's trying to charge you more for something that it might be worth. So because there's all this confusion about what exactly luxury is luxury this, is luxury that, is it mega luxury, is it mega ultra luxury, is it mega ultra mega luxury? Nobody really knows. We picked a number, created an arbitrary line, and we called it $1 million or more. And if it is $1 million or more, we're deeming it luxurious. So therefore, if something is listed or if it's sold for $999,999, it's not luxurious. However, if it trades or if it's listed for $1 million or more, it will be luxurious. So 7 figures is luxury for us. 6 figures is standard, is normal, is whatever. That's the line we're using. So everything I'm going to talk about in this particular segment will be based on $1 million or more. And these are condos in greater downtown Miami. So we got 540 luxury condos for sale in greater downtown Miami right now. 540. Average asking price per door, $2.5 million a door, $2.5 million a door. Average asking price per square foot. Again, the important number to pay attention to, $1,072 a foot, $1,072 a foot. And days on market, those luxury condos that are on the market today, they've been there an average of 161 days and counting, 161 days and counting. Keeping in mind that once they do go under contract, it typically takes another 30 to 60 days to close. If you want me to convert that 161 day mark into months, that's going to work out to 5.4 months. Somebody looking to sell their place, it should expect to be on the market, 5.4 months. Let's start pending. These are the deals that were listed and then they went under contract. 53 luxury condos are pending right now. Average asking price when these units went pending, $1.9 million a door, $1.9 million a door, or $930 a foot, $930 a foot. And those units that are pending, they were listed and they were pending on average 133 days and counting, 133 days and counting, which translated into months is going to be 4.4 months. 4.4 months is how long these places have been for sale and under contract. Now, in terms of transaction, 2022, just over 650 luxury condos traded, 650. The average transaction price just under $1.9 million a door, $1.9 million a door, or $869 a foot, $869 per square foot. And they took a grand total of 107 days. 107 days to be listed, to go pending, and to transact. And converting that into months, 3.6 months, 3.6 months. And again, days on market is a great indicator as to sentiment. So we can see here in 2022, it took 107 days for the entire transaction. Right now today, for those condos that are for sale, they've been there 161 days and counting. Add another 30 to 60 days if they were to go under contract today. So you can see the luxury condo market, it's taking twice as long in order to potentially do a deal in 2023 as it did in 2022. Now, let's take a look at that premium, that difference between the average asking price versus the average transaction price. Remember, 20% is typically sends a signal to the market that, okay, this seller might be willing to negotiate. And ideally, if you're a buyer, you're probably going to split the difference and try to get a 10% premium or so. Just a rule of thumb, something I picked up along the way. So what do we got going on for luxury condos here in North Miami in terms of spread or VIG? We're talking about 35% premium where it should be 20%. So again, way too high price per door in order to do a transaction. What about price per square foot? What's the luxury market look like there? Now we're looking at 23% premium, 23% premium. So that suggests maybe some of these sellers are pricing the place to try to bring in some offers. So that's an encouraging sign. Now, in terms of transactions that occurred in 2022, what was the sales pace? What was the velocity for luxury condos? Well, you're looking at about 54 luxury condos moved per month in 2022. 54. How did I come up with that? I took the 650 units that traded, I divided by 12, which is 12 months in a year, and I came up at an average of 54 deals per month. Now, if I divide that 54 units per month, luxury units per month, sales pace, I divided what's currently on the market, which is just about 540. I'm going to come up with 9.9 months of supply, 9.9 months of supply. 6 months is equilibrium. Less than 6 months means it's a seller's market. But we're talking about 10 months of supply here. So this is clearly a buyer's market for luxury condos in Greater Downtown Miami. Now, some brokers who are listing units, and remember that the role of a listing broker is to try to get the highest price for a particular seller. And for what it's worth, commissions are based on price pay. So the higher the price, the more money the realtor is going to make, and the more money ultimately the seller will put in their pocket. So everybody on the sell side is going to want to drive up the price. Now, what I will tell you is when you look at 10 months supply, that's going to suggest that it is a buyer's market. However, some of these luxury brokers try to counter that argument. They're going to say, well, a luxury seller has more money than God, therefore they don't need to sell, and therefore they can sit around much longer. So if you want to look at equilibrium for luxury, you should really focus on maybe 12 months or even 18 months. So if you are in that camp, the 12 to 18 months would suggest equilibrium for luxury condo market, it'll still be a seller's market. However, if you focus on the typical rule of thumb, which is 6 months, this is clearly a buyer's market for luxury condos in Greater Downtown Miami. We're going to go ahead. We'll take a commercial break. Other side of the break, we're going to get into the distressed condo market in Greater Downtown Miami.
This is Peter Zalewski of the Condo Vultures podcast. Before I started doing these podcasts, I was in the business of being a licensed real estate broker, a contributing columnist for the Miami Herald, as well as the Miami Real Deal, but also extra witness work in consulting. So if you are looking for an expert witness, or if you're looking for consulting services, a straight talk perspective as to what's going on in a particular marketplace, a building, or what happened previously, for whatever your situation is, whether you are an attorney, whether you are an institutional fund looking to invest, or whether you're a lender who's trying to come up with some sort of strategy and approach for your lending committee going forward, I just might be able to help you. To get a hold of me, please reach out to Peter@condovultures.com. That's Peter@condovultures.com, or give me a call to the office at 305-865-5859, 305-865-5859.
Welcome back to Miami Real Estate Investing Podcast. I'm your host, Peter Zalewski from Condo Vultures. We talked about condos and we talked about luxury condos. Now we're going to talk about the distressed condo market. The best place to start is to get into the two categories of distressed markets. There are short sales and there are bank owned, real estate owned, REO, and foreclosures, all one and the same. In the industry, you refer to it as REO, which stands for real estate owned, which basically means the lender is in control of the property or somebody has foreclosed and therefore they're in control of the property. It's a common way to refer to it as REO. So we got short sale and we got REO. Short sale, very simply, is a situation where the seller, who is also a borrower, so they took money from the bank, they're going to come up short of repaying what's owed. And then the alternative is going to be the foreclosure. This is a situation where the seller will not be paying back the bank, and the bank will, you have to use the court process in order to get their hands on the property. And the bank can then turn around, try to sell it off, and recoup some of the money that's ultimately owed to them. So short sale, seller comes up short of being able to repay the bank, and the bank is coming up short of getting repaid, versus the foreclosure, which is also referred to as a real estate owned, an REO, or a bank owned. All one and the same. They're generic terms that people tend to throw around. Now, question might be, why would a bank accept less than ultimately what they're owed? Now, the reason a bank might accept less than what they're owed, and it's a hard sell, but it does occur, especially when you tend to get a market flooded with all kinds of distressed units. Typically, a bank will accept less when they are trying to avoid all kind of conflict, and they're trying to get their hands on a piece of property that they can get back most of what they have, and they might have some sort of route or avenue to be able to go after the particular borrower and try to reclaim some of that. It's a situation to check with your attorney, try to sort of give you the details. But I will tell you, during the Great Recession, there were a lot of people and got foreclosed. They went through the legal process, which will take 9 to 12 months. Could be longer, could be shorter, but ballpark 9 to 12 months. And what some of these lenders realized when they ultimately got the property back, it was nothing like what they imagined. And why was that? Because the sellers who were losing their property, they realized they were going to be upside down. They were trying to make some cash. So they would turn around, they would sell off the appliances, they would damage the unit, or maybe their tenants damage the unit, rip out the cabinetry. There's all kinds of issues that ultimately would create some problems for lenders. Lenders are not in the business of owning real estate. They want to basically rent out their, and therefore they want to avoid anything that might lead to a situation where A, they're not getting repaid. They're not getting their mortgage payments monthly. B, they don't want to have to pay legal fees. And C, they sure as hell don't want to have to rehab a unit because it's been destroyed. And then on top of that, they have to turn around and try to resell the property. So some lenders will simply take the proactive approach and work with the seller to unload a property. Maybe they take a little bit of a haircut, that being the bank. Maybe they'll take a haircut, but they can move on. They can focus on really what they do, which is putting money on the street, versus some institutions, which will simply go through the foreclosure process. They'll go to 9 to 12 months, and at the end of the day, they get back some property, which now a type of job, and then they have to turn around and try to sell it. So there's two different ways to sort of approach. Right now, into the stress market, and we're going to talk about the stress first, then we'll talk about short sales, and then we'll talk about real estate owned. So what do we got going on in the overall market? Right now, there are only 3 distressed units for sale in Greater Downtown Miami, 3 distressed units for sale. Only one is pending. And then in 2022, you had about 19 transactions, about 19 distressed units traded in Greater Downtown Miami in 2022. If I take that 19 units that traded and I divide it by 12, which is 12 months in a year, I'm going to come up with a sales space of about 1.6 distressed units trading per month in 2022 in Greater Downtown Miami. If I take the 1.6 sales space, I divide it what's currently in the market, which is going to be 3, I will come up with 1.9 months supply, 1.9 months supply. Why is 1.9 months supply important? Because it will suggest that it is a seller's market. Again, equilibrium is going to be 6 months, but this should not come as a surprise. Lenders who ultimately are in possession of properties that they had to foreclose on, they don't want to flood the market with too much inventory. So what they will typically do is release it slowly, a slow burn, try to bolster pricing. There's a lot of interest by investors for distress. There's a perception that distress unit ultimately is going to mean that there's equity on this or some sort of opportunity to be gained. A lot of times that will not be the case if there's not a lot of supply. Therefore, lenders try to minimize what's currently on the market. So let's get into each particular category. We're going to talk short sale first, then we'll talk real estate. On the short sale front, remember, short sale is when a seller will come up short of repaying a bank what it's owed. Currently, 0 are for sale, 0 for sale. Pending sales, 0. 0 short sales are currently pending, and 7 traded in 2022, 7 traded in 2022. Those 7 that traded, they traded an average of 350,300 a door, 350,300 per door, or $349 a foot. And it took a grand total of 77 days for one of these short sales in Greater Downtown Miami to be listed, to go pending, and ultimately transact. Try to figure it out in terms of months. That's going to be 2.6 months. 2.6 months is what a typical short sale took. In terms of the supply and the sales pace, Well, based on the 7 units that traded in 2022, if I divide it by 12 months in a year, I'm going to come up with 0.6 short sales trading per month. If I divide that what's currently on the market, which is 0, there basically is nothing available. There is no market for short sales, but it gives you a good indication what the market was. Now let's go ahead and talk about REO. Again, real estate owned, bank owned, and or foreclosure, all one in the same in terms of the way the industry talks about it. Currently, 3 REOs are on the market. 3 are on the market. The average asking price for an REO, $1.7 million a door, $1.7 million a door. So these are not like some rundown over 55 community place that was built in the 1970s. We're talking about high-end condos where the average REO or bank-owned price, $1.7 million a door. So this is a luxury condo by our definition of $1 million or more, or 7 figures. What's the average asking price for a REO in downtown Miami? $770 a foot, 770 per foot. And those REOs have been on the market an average of 18 days, which is less than a month. In terms of pending, 1 REO is pending in Greater Downtown Miami right now. Its asking price when it went pending, $500,000 a door, or $838 a foot. And it's been on the market and pending for a grand total of 49 days, which is just under 2 months. Now, in terms of the transactions that occurred in 2022, there were 12 REOs that traded in Greater Downtown Miami, traded an average price of $921,350 a door, $921,350 per door. So you can see that's a high-end foreclosure. What is it on a price per square foot basis? $547 a foot. And it took 42 days to be listed, to go into contract, and to ultimately transact. So you can see there's a lot of interest. Now, if we look at the days on the market, 42 days is what it took in 2022. The 3 REOs that are on the market today, they've been there only 18 days. So we're getting to the point where they're probably going to be going under contract if the demand is still the same, and then ultimately will probably turn around and close pretty quickly. A lot of times when you get into the distressed market, it tends to be an all cash type of deal. They don't really tend to have financing. If financing does get involved, it tends to come after the fact. So typically an all cash buyer will go in, they'll take down the unit, and then after the fact, they will go ahead and get a mortgage against it. Now, in terms of sales pace for REOs in 2022, it's an average of 1 REO trading per month. How do they come up with that? Well, 12 transactions. 12 transactions divided by 12 months in a year. Therefore, I get 1 unit per month. If I divide that what's currently in the market, which is 3 units, I come up with 3 months of supply. Again, equilibrium is 6 months. So this is a seller's market for REO, but again, no surprise. No lender wants to flood the market with product. They want to lease very little, and therefore the investors who are out there waiting for some sort of distressed unit, they're probably going to bid up the price, and that's apparently what seems to be going on in the REO market in Greater Downtown Miami at this point. We're going to go ahead. We'll take a commercial break. Other side of the break, we're going to get into the rental market in Greater Downtown.
Don't buy a South Florida condo, discounted or distressed, before taking a Condo Vultures correction tour. CondoVultures.com offers weekly bus and walking tours that focus on educating buyers on the how-tos of identifying discounted condos, analyzing the opportunities, and purchasing units. Every tour attendee receives a list of all condo projects in a particular market, a market assessment handout, and unmatched expert analysis. For more information on the condo correction tours, please visit condovultures.eventbrite.com.
Welcome back to Miami Real Estate Investing Podcast. I'm your host, Peter Zalewski from Condo Vultures. We talked about condos. We talked about luxury condos. We talked about the distressed condo market. Now we're going to talk about the rental market. A couple things to keep in mind when you talk about rentals. Rental data is sketchy, extremely sketchy. Why is that? A couple different reasons. First of all, there's no government involvement for a rental. It's not like a transaction where a deed has to be recorded, a tax is paid based on the transaction price. When a rental occurs, there is no public record whatsoever. So when you're trading off of rental information or using rental information, you're pretty much at the mercy of whatever the people involved are telling you. You have no way to. I was a journalist for a number of years. I come from a background where the saying is, your mother says she loves you, check it out. You can't check out rental information. So that's the first important part to keep in mind. Second part, and most important part to keep in mind, is that any rental information I'm referring to is coming on the multiple listing. However, if you are a landlord, you have 100 units, 200 units, 300 units, 400 units, are you really going to want to pay a broker, some realtor, to go ahead and market your property and then have to rely on other realtors to go ahead and bring in a tenant? And for that, you will pay a 10% commission of the gross annual rent. So what does that mean? $1,000 a month times 12 months in a year means $12,000. you're giving away 10% of that. Now, if you have 100 units, 200 units, 300 units, that's going to start to add up quite a bit, especially because places aren't renting for $1,000 a month. So what many landlords will do that have multiple units, just hire a person or two. They're going to put them in a leasing office. They're going to let them manage it. They'll pay them $30, $40, $50, $60,000 a year, and they will be a tremendous savings. But what happens is their statistics, their information never makes it into the numbers. So shadow inventory is what we would call that. And that's what makes it very difficult to sort of gauge the rental market. The other thing that makes it very difficult to gauge the rental market is what is the duration? What's the period of time for the rentals are going to be made available? Are they for rent by the day? Are they for rent by the week? Are they for rent by the month? Are they for rent by the year? All of these different things complicates it as well. So unlike what we did in the first three segments where we talked about condos, luxury condos, distressed condos, we focus on average. For rental data, because it's so complicated because it's so sketchy, we're simply going to base our numbers on median. We're going to take that number that's right there in the middle. And why are we doing that rather than going through and carving it out and grinding it out and working on getting the accurate data? Because even if we work hard, we're never going to have the true picture because there's so many different variables that will never ultimately surface because there's no public record and you don't have the input of what's going on the corporate landlord side. So this is simply the equivalent of licking your finger, holding it up, guessing which way the wind blows, because that's all we're really doing. However, it's giving you an indication of what the sort of, the talk on the street is, the rumor on the street, the news on the street, if you will. So let's get in the rental market. Let's talk about what's going on in greater downtown Miami. And by the way, for the rental data that I'm referring to, I'm going to include everything except single family houses. And what is that? That means apartments, condos, efficiencies, multifamily, and townhouses. So anything but single family house is what we're going to focus on for greater downtown Miami rental market. Currently 1,800 properties on the market, And again, we're looking at median number, which is the number right in the middle. Median ask is $4,300 a month, $4,300 per month. Median price per square foot monthly, $4.46 per square foot per month. And those places that are for rent, they've been there on a median basis 37 days, a little bit over a month. They've been sitting there on the market. Now, what about pending? These are the places that were put up for rent, and now they have a contract and they're waiting to be completed. 525, rounded, 525 are currently pending. When they went pending, the median price was $3,600 a month, $36 a month, or $3.77 a square foot per month, $3.77 a square foot per month. And those pending deals, 26 days. So they were listed and they've been under contract, grand total of 26 days. Convert that into how many days in a month? 30. So you can say just about a month or so. Now, what about in 2022? How many places were rented? 7,450, 7,450. They rented at a median price of $3,695 a month, $3,695 per month, or $4.01 a square foot per month, $4.01 a square foot per month. Now, let me remind you, the pending right now, those 525 that are pending, they went under contract at a median price of $3.77 a square foot per month. However, in 2022, the places that were transacted, they were leased at $4.01. So you can see there's a contraction. The places that are renting today, they are renting for less than they were rented for in 2022. That's a suggestion that we're starting to see downward pressure on the rental market. So I figured I would point that out. So $4.01 a square foot per month is what places rent for in 2022. And how many days did it take to rent in 2022? 27 days, all in. And, put up for rent, pending, transacted, 27 days. So roughly about a month or so. Now, let's talk about that days on market. 27 days is what it took in 2022 to lease a place. And the places that are rent for rent today in greater downtown Miami, you can see it's taking longer right now than it did in 2022. So that's a sign that the rental market, from a sentiment perspective, is not as strong as it was in 2022. So those tenants, they're sitting on the sideline longer. Why are they doing it? Maybe because of price. So let's take a look at price. What is the VIG? What's the difference? And again, 20% over the going price is typically when it'll send a signal to the marketplace that, okay, this landlord might be willing to negotiate. And typically you split the difference and you're going to get some wiggle room. Well, the spread, the premium, the VIG on rentals is about 16%. So within that price range, price per month of a landlord that wants to negotiate. And again, $4,300 is what they're asking by the landlord on a median basis. $3,695 is what they lease for. So it should be right in there at that range where if landlords will negotiate, they should be able to fill it. But then why is the days on market more? So something to consider. Now, what about price per square foot monthly? Well, $4.01 a square foot is what places lease for in 2022. Compare that to what places are asking right now, $4.46, $4.46. So that is about 11% spread, about 11% spread. So again, even though it's in that 20% range that says to the market, hey, we're willing to negotiate, places are renting and the days on the market is going up. That is a telltale sign that we have a disconnect between the renter/tenant and the landlord. So that's something to keep in mind. Now let's talk about velocity. What's going on with velocity? And let's talk about supply. So in 2022, there was an average of 620 places rented per month at Greater Miami 621. And those 621, that 621 number, how did I come up with it? Well, I took the 7,450 total transactions or total leases, divided it by 12, and that's how I come up with the 621 per month. That's my leasing velocity. Now, if I take that 621 leasing velocity, I apply to what's currently in the market, which is 1,800, I'm going to come up with 2.9 months supply. 2.9 months supply. What does 2.9 months supply mean? It means it is a landlord's market. Remember, 6 months is equilibrium. However, days on market's going up. Days on market's going up while the spread, the premium, the VIG being asked is really nothing whatsoever. So this is something to keep in mind. I would venture to guess that as we get into the second half of 2023, as we deal with the economic situation in the United States, as we deal with our banking crisis, as we deal with what's going on in the stock market with crypto, a variety of different things, you're probably going to start to see landlords start to get a lot more relaxed and a lot more willing as it filling up places. Why? Because no landlord wants their place to sit dormant. They don't want it to be vacant because every month it sits vacant. They're still on the hook. They're going to pay their property taxes. They're going to pay their insurance. They got to pay their condo maintenance. And if they have a mortgage, they got to be paying that. So landlords cannot afford to keep their places vacant because they're too proud because they need to get a certain price. No. What tends to happen is as the market changes, you go from a situation where a landlord is banking to a point where a landlord is subsidizing a tenant. And based on the numbers I'm seeing here, do not be surprised to see that. Now, again, keep in mind, rental data is sketchy. And why is it sketchy? Because we don't have the whole picture. We just got what's in the MLS. We don't have what's going on the corporate side. So that's something very important to keep in mind. I hope you enjoyed this particular podcast, Greater Downtown Miami Marketplace. Greater Downtown Miami is a market which is really a telltale sign of what's going on in the marketplace, simply because there's so much quantity. There is so much tonnage, as the New Yorkers say. There's so much velocity. It tends to suggest what's really going to come down the pike as we go forward for various markets around Tri-County, South Florida area. So it's an important one to sort of pay attention to. So I want to thank you for tuning in for that particular podcast. I want to remind you, if you want to check out any of our charts, look into the description of this particular podcast. I'll have links to all of it. If you have any comments for us, or questions, please send an email to inquiry@condovultures.com. That's INQUIRY@condovultures.com. If you want to watch the podcast, go to any platform that provides for video, such as Spotify, or you can go to YouTube where our handle is Condo Vultures TV. Once again, I'm Peter Zalewski of Condo Vultures. Thank you for tuning in. We appreciate that. Be sure to subscribe. Be sure to check out our Reporters Roundtable. It is a weekly roundtable that I put together with current former journalists talking about some of the biggest news stories that have come out that are affecting the Tri-County, South Florida region. And we sort of cut through all the smoke, the fluff, and help you get an understanding of what's going on. So that's a great podcast. If you haven't listened to it yet, I'd encourage you to sort of check it out. So until next time, take care of yourself. We'll catch up soon. Ciao, ciao.